Hello everybody, hope that you are good. First of all, thank you very much for being here another week, for listening to me. And of course, we want to talk about this projection that I drew on Sunday in the Bitcoin Sunday update on X that so far is playing out. It doesn't mean that it's going to continue playing out, but I think it will. And I'm going to explain my reasons why. And I know when I drew this on Sunday, a lot of people didn't agree with me. That's completely fine. Don't worry. In fact, that gave me more confidence that it was going to play out, because when all the market agrees on one idea, on a projection, then it doesn't usually happen. The market doesn't give that away, okay? So when I saw many people disagreeing, I thought, okay, this definitely has had a possibility of playing out. So far, it's been playing out. I drew this third spike higher than the previous two, simply because I was expecting this reversal here, and for that reversal to happen, then first, they have to make sure that all the current short positions that were opening inside this area and this area, with the stop losses above the highs, were going to get hit. So for that, I was expecting a third tap higher. That came, it happened. In this area exactly here, also, we got the news that Biden was dropping out of this year presidential election race. And we created this long wick to the downside. That was also giving me more confidence that we want to revisit this area here, okay? So when I saw this spike here, and this was after I posted my projection, then I thought, okay, definitely this can play out. Then we saw price dropping, filling that week. Also in the 4 hours time frame, we saw price going towards the area. That was around here. And finally, it came to my area here, okay? That if you notice, is there. Why this area? Well, simply because there was a couple of liquidity pools. One in the 1 hour time frame that my indicator marked, and right now has removed because it's failed, but you can see that we have created a new one here, okay? But anyway, this was a liquidity pool that got filled. That's not a straight line at all. There, that liquidity pool there got filled, but also in the 4 hour time frame, we had a very similar situation, and it was this one here, okay? You can also see this very large candle body here, okay? So you can see how exactly retrace those two liquidity pools, especially the one in the 4 hour time frame. And the next one is really below. That would be the next area to look for longs if we lose this area, but I think we might hold here. But again, if price starts to drop in lower, then we have this liquidity pool matching with the range lows that in principle should be able to hold. Okay, we'll explain that later. So let's go back to the 1 hour time frame. Why was I expecting all of this volatility? Well, simply because we got the news of Biden dropping out of the presidential election race, which means that it was going to be a week of volatility. I didn't go as far as saying if that was bullish or bearish, because that's not for me to decide, it's for the market to decide. But in terms of volatility, I knew it was going to bring a lot of volatility, so I was going for a very ambitious and active projection. As you can see, I see a lot of price movement. I was literally drawing 5% down, 7% up. Okay. Now, can this happen still inside this week? Well, we have only 2 days, because Saturday and Sunday I'm not expecting much of a move. So perhaps it doesn't happen this week and it continues going through next week. But also why I think that this might play out during next week, and it's something also I mentioned on Sunday, is that I think that this drop here is a shakeout of they're basically shaking out the market. And this is something that I was anticipating in the Bitcoin Sunday update, simply because the 31st of July we have the FOMC meeting. Okay? Now, the FOMC meeting, that is going to happen on Wednesday of next week. And I'm expecting it to be bullish. And I'm going to tell you why. We had the unemployment rate going up. We have inflation going down. And this is adding a lot of pressure for the Fed to either cut rates, which, to be honest, I'm not expecting the Fed to cut rates this month. But what I'm expecting is that this month, the 31st of July, they announce or they hint very clearly that on September, because in August we don't have FOMC. So in September's FOMC meeting, they will cut the rates. So I'm expecting the 31st of July, either an announcement of that or a hint very clear that that's what they're going to do. And when that happens, then the market tends to price that in. So I'm going ahead of the market here. I don't know if it's going to happen or not, but that's my game theory. So if that is the case, then the market is going to price in that rate cut, and prices are going to go higher. And we have a lot of liquidations here. Now, if you notice, go on X, check your timeline. We are in this level here, and most traders are expecting lower prices. They are scared to go long, right? So that is what is telling me that it's likely that prices go up. Again, same as what happened on Sunday. People here were greedy. They were expecting 80K. I got some critics for this drop here. It happened. Now we're here and people are scared that prices are going to continue going down. And I'm expecting price to reverse from here. So it's market psychology. Let's see what happens. Also, I'll tell you in the 1 hour time frame something that helps me to think that it's likely that we see a reversal from here. Actually, it's two things. The first thing is, if you notice, we have here so many wicks. Let's zoom in. Look at that. So many wicks to the downside. But price is not breaking through this area. Why are they spiking down inside this orange box here with wicks, and they are not bringing price lower? Why are they holding this area? Is it because the market maker is building longs at the lowest level in the chart? I mean, just think about it, guys. When you set wicks like this, okay, that means that you are opening, well, you can open longs here, okay, that will be here, 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 and pushing price back up. Is that what is happening, guys? Well, it could be, okay? It could be that the market maker is building longs here. So far, that will be my conclusion right now. That's what I think. Again, maybe now I post the video and after 2 hours, price do something like this, boom. But by looking at what happens, the behavior of the candles, literally, if you zoom out and you see what happens, look at this, for example, wicks to the upside here, price not breaking through. Why? Because they were building shorts at the highest area, drop. It happens the same here, okay? It happens the same here. Wicks to the downside, prices go up. Wicks to the downside, prices go up. Wicks to the downside, look at this, guys. So many wicks to the downside, then boom, price go up, okay? Sorry, got a bit too energetic there. But that is the reason, number one, why I think that we might see a reversal. And the second one is, sorry for all the clicking, I'm gonna use the mouse pad instead of the laptop. The other reason is because I always say this, okay? Fake move at the start of the week. That, when I say at the start of the week, the start of the trading week is from Sunday evening to Monday evening. Sometimes it comes on Sunday, sometimes it comes on Monday, but usually we see a false move at the start of the week. Now, to me, that false move was clearly this pump here that came after the Biden news. You got that pump there, third top pattern, everybody euphoric, calling 80K. Then you see the drop here through all the week. See, literally, since Monday until Thursday, you see the drop. And for the guys that are, well, have done the course or that right now doing the course, what happens on Thursdays, guys? Usually we see a reversal. And we have the 1 hour 50 MA here at 65,300. We also have this liquidity pool that my indicator is marking. Check that out. It's matching with the 1 hour 50 MA. With all these wicks here, to the downside of a price not breaking through. Are we getting a reversal today to 65,000? That's a $1,000 move. Okay, so based on day trading, that is where I'm putting my money today. Right now, let's continue. I hope that was clear. Now that I'm doing, instead of a daily video, I'm doing more like a weekly video analyzing the whole spectrum of time frames and what is coming for next week, etc. Then I I can take my time to explain more my reasoning. So sorry for that long explanation, but I think it's necessary. I think it can help somebody, and this is what YouTube is for in my case, because on X I have limitation on characters. I don't have my voice to express myself, and I get that on YouTube, so that's why I'm also here. Now let's go to the 4 hours time frame. What do we have here? I have somebody right now on X, a follower, asking me, CrypNuevo, is this a head and shoulders? I don't trade fixed patterns with head and shoulders, okay? But who knows? If that is the case, it's not going to be because the head and shoulders, but it's going to be because the market maker believes that there is enough liquidity inside this area to come to the range lows towards this liquidity pool, and then the same price is higher. So it's what I'm telling you. We lose this zone here, and yes, I'm going to be paying an eye. I'm going to pay attention to this liquidity pool and the range lows. That's a 60,700, okay? If we get to inside this area, then we would also be partially filling that CME gap here that we have, that if you notice, it goes from 60,900 and it goes to 58,470. So we would be partially filling that SME gap if we drop to the range lows again, okay? Or something like this perhaps. Could happen. It could happen. Now, remember that CME gaps, and this is something I explained in the previous video, it's something that can take even months before they get filled. So don't expect them to get filled immediately, because that's usually a big mistake, or the most common mistake regarding SME gaps, especially when a CME gap is this big, okay? Because when they are smaller, then yes, they tend to get filled immediately, okay? For example, this one here, you got a very small SME gap here. Those gaps tend to get filled straight away. Between 80 and 85% of them get filled within the next week, right? But when it's this big, it can take weeks, months, years. It doesn't have to be immediately, right? So that will be the next area where I will be looking for longs if we lose this area. But what I have clear, guys, is that if you allow me to go into the daily time frame, and let me explain this for you, okay? You're going to be able to see this well. You are inside a range, all right? You are inside a range. You have here your range lows. You also have here your range highs. And there is an area that is this yellow dotted line that is a strong resistance. And if you notice here, there is a void. We haven't filled this area. Inside this area, there is a massive open interest gap, which most of you also know because many of you have done the course. But we have here a massive open interest gap, and that is basically a big sign of liquidity. Okay, so yes, do I think that price is gonna go to this area here? This area here? Of course, yes. Now, I'm expecting it to get there, especially after the 31st of July, which I think is going to be the catalyst for prices to go up. That is my reasoning, okay? Because I'm expecting the Fed to do so. Also, you have to pay attention that we are above the daily 50 MA, right above it. So there is a possibility of price coming here, testing a support, consolidate, push higher. All right, so we have here another potential strong support. But again, if we lose the daily 50 MA, then yes, I'm going to the range lows. And that's what I'll be looking again for longs, because that's what I went here, and here, and here, and here. All right, so yes, possibility of going to the range lows and bringing prices higher. But in the short term, I'm still betting on my projection that especially today, we should see some kind of upside. Okay, weeks to the downside, price not progressing any further. Thursday, reversal day. I mean, there are many things there. Liquidity pool matching with the 1 hour 50 MA that we didn't test since Wednesday. Well, since yesterday, 24 hours, which is quite a lot for the 1 hour time frame. So I think that I've said everything that I wanted to say in this video. I'll be updating you more through X and through Telegram too. And also before I go, I have to say that if you want to access this indicator, that probably many of you are wondering how to get it, then there are two ways. The first way is to become a student of my course, but that's not possible at the moment because we are remaking the website the whole month of July, and part of August is going to be for rebuilding the website because it's looking a bit old and we want to add some more functions. So that's not possible. Perhaps in September we have a course. And the other option is to become an active trader using my referral link on BingX. And then every month we're giving access to new traders, basically to the indicator. You will receive an email from BingX with a form that I made to collect your TradingView username. You fill the form, I see your TradingView username, I give you access, and you get it. So that's pretty much everything, guys. All the links are in the description. The Twitter, the Telegram, the referral link, and that's all. So thank you so much for watching the video, and I'll see you soon.